Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Bitcoin went above our first targets from yesterday's video, 101,500, and even tested the second target at 103,500. But it got rejected so far from both of them. After the rejections, the price, as of the time of recording, dipped to 101,300. We can see that once the price action lost the key exponential moving averages in my 1-hour chart, the 21, 50, and 200 exponential moving average, it broke down into the newest dip. I still have high conviction that we will see an upward resolution soon, but keep in mind we are entering February on a Saturday and Sunday, which is usually bad for volume. The session volume profile indicator shows that the last point of control on the 1-hour chart sits at 102,600. Once we clear this level to the upside, 103,000 is next. The volume range visible profile is showing 105,000 as the strongest level since mid-January. And once we break above that, we can start testing for new all-time highs once we break 108,000 again. But let's not get ahead of ourselves. Looking at the 3-day liquidation heat map, we can see that market makers cheekily went for the 103,400 level, and now they have hunted the newly opened longs at 101K. But the upper levels at 104.5 and 106.5 are much more bigger in volume, with over 230 million in short leverage. In my opinion, these two levels are getting hunted soon. In other news, Michael Saylor tweeted that MicroStrategy has acquired 10,107 Bitcoin for approximately $1.1 billion at an average price of $105,596 per Bitcoin. As of January 26, MicroStrategy now holds 471,107 Bitcoin, acquired for around $30.4 billion at an average price of $64,511 per Bitcoin. Big dogs are buying. Are you still sitting on the sidelines? If you want even more insights, join my free Discord to stay ahead of the market with real-time updates. If you found this analysis valuable, smash the like button. It really helps the channel. Subscribe and turn on the bell so you never miss critical Bitcoin updates. And see you in the next one.